Hello everyone, welcome back. This is Jeff from MySteel's Iron Ore Department here to give you the latest on China's ferrous market. Let's dive in. This past week, the ferrous market experienced a downturn with heightened volatility as the negative impacts from the traditional off-peak season on downstream sectors gradually intensified. China's manufacturing PMI fell by 0.4 percentage points on month to 49.3% in July, remaining below the 50% threshold. Additionally, the CPC Politburo meeting was held without introducing any stimulus policies exceeding expectations, although it mentioned the governance of disorderly competition among enterprises according to laws and regulations, and the promotion of capacity management in key industries. In addition, there was no material progress in the economic and trade negotiations between China and the United States. As a result, market sentiment weakened, with earlier macro expectations largely priced in following the previous rally in the futures markets. Steel fundamentals weakened, with total steel inventories starting to rise due to increasing supply and declining demand. Although some steel mills underwent short-term maintenance and adjusted their product mix, their willingness to reduce production remained limited amid currently favorable steelmaking profits. Apparent consumption of finished steel declined, with long steel contributing most to the drop, while flat steel demand remained relatively resilient. Typhoon conditions in various regions have slowed downstream construction activity. In addition, the previous price surge led traders to adopt a wait-and-see approach, dampening procurement willingness among downstream buyers. As a result, construction steel transactions have contracted significantly throughout this period. Mini mills continue to ramp up production, while output at integrated mills declined. The profitability rate of integrated steel mills reached a new year-to-date high of 65.37%. Despite this, hot metal output fell slightly due to routine maintenance and blast furnace shutdowns triggered by heavy rainfall. In addition, operational inefficiencies at some blast furnaces in certain regions further impacted production. These factors, along with market expectations of output restrictions ahead of the upcoming National and Military Parade, have exerted downward pressure on raw material markets. Iron ore also underperformed despite a notable drop in portside inventories, driven by drastically reduced arrivals. Meanwhile, coking coal and coke futures saw significant declines as speculative activity weakened. However, the fourth round of coke price hikes in the spot market has been successfully implemented, and the fifth round has been proposed. Coking plant margins remain negative, limiting producers' motivation to increase output. Coupled with hot metal production, this led to a decline in total coke inventories, particularly at independent coking plants. Looking ahead, the influence of macroeconomic narratives is expected to fade, with market fundamentals likely to regain dominance in driving the direction of the ferrous market. Steel fundamentals may continue to deteriorate amid the lack of production cuts and ongoing off-peak demand conditions. However, discussion around anti-involution and current extremely low steel inventory levels may add price elasticity and contribute to more frequent fluctuations going forward. Thanks for tuning in to this week's China Ferrous Market Update. We will see you next time.